Bitcoin dropped to almost exactly $60,000 yesterday, and now we're back at 61,500. So I just wanted to do a quick technical update of how I see the charts right now. Firstly, I want to say this sell-off was expected. Everyone was so bullish over the last couple of days. Going into October, my entire Twitter feed, everyone was calling for up only. And usually when the entire Twitter feed agrees on one direction being the only outcome, obviously often the opposite happens, as we tend to see. So everyone was getting super bullish once again around 66,000, 65,000, and we get that flush. Now, what's interesting to note is that you can see if I put this Fibonacci golden pocket here from these lows to these highs, it hit exactly the 0.70%. So this is purely just technical and algorithmic, in my opinion. It's doing exactly what it often does regardless of whatever's going on in the world. Okay, perfect touch here and initial bounce. Now, there is still a chance that this goes lower because the entire move, the Fib golden pocket here, is between 58,000 for the high end of it and then potentially just under 57,000. The interesting thing is also at this point, we have support of the 50-week moving average around 56,000. So I do think that for the bullish case, the lowest that we should go is about 56,000. There is maybe one little exception with a wick below that, but in general, I am looking for lows and still continuation higher. I will show you in a second what I mean, because there's actually a gap on the CME chart at about 54,000. But we should not get a weekly close below the 50-week moving average, which is below 56,000. So maybe we have some sort of wick where it drops, but as long as it recovers and doesn't close below 56,000, that is fine. So if we zoom out here, this is still the 4-hourly chart, and you can see we had that bounce here from the 0.70. Now what's interesting to note is we did have a higher high than this one, but it is still technically a lower high versus this one. So we're in a situation where we're still in the same range between the all-time high at 74,000 and 50,000 here at the lows. And this has just been going on for many months, basically since March, so 7 or 8 months now almost. And I think we're still in the process here of taking this liquidity on the upside. But again, as usual, it's never going to be easy and people keep getting chopped up. They keep longing the tops and then getting wrecked and then shorting the bottoms and getting wrecked. And that is basically what this price action is designed to do. So I do still think we are still here in a bullish trend, but where this is going to go in the short term, we had this bounce off here. We now need to get back above this level. We need to get back above 64. Otherwise, it could do something like this, where it could drop. Maybe it drops down here, and then maybe it does something like this. That's still completely possible. And even though the months of October and November, December are bullish, we have seen previously sell-offs in the first part of October. So in the first week or so, this is completely possible. And it would do exactly that. Everyone is so bullish for October that they all start to long, then they first all get liquidated, and when they're all liquidated and turning short, that's when it reverses back up. So I would say we keep an eye on this. If we do get a drop into this 56, 57 zone, that could very potentially be a good setup there. Then what I wanted to show you also is the CME chart, specifically for the reason that it creates these gaps that tend to be filled. So just for those of you who don't know, CME, it's the CME futures, and this trades in the same as traditional finance hours, the same way as the stock market trades, which means it is not open 24 hours a day like Bitcoin is. It means it's only trading during New York session times, and it is closed on the weekend. So because spot Bitcoin trades 24/7, that means that when this CME closes and it's not trading and the Bitcoin price changes because it's open 24/7, then by the time CME opens again, if there's a difference between those two rates, then it creates these kind of gaps. It jumps up or down in the market. And as you can see here, it tends to fill these gaps. So for example, this gap was created over here. It went higher first initially, but then eventually it came back down to fill the gap. And that happens over and over. You can see here, smaller gap, first it went higher, it filled it. This gap over here, when it gapped down, eventually it came back up to fill it. Here, this gap, it came back up to fill it. So now we currently have an open gap here at just about $54,000. Now that is a long way down still, and it would take us down below the 50-week moving average, which would not be a good sign. However, if it happens intra-week, so if it happens within, let's say, a daily period, and it goes all the way down, but it makes a quick recovery, and we do not close below that 50-week moving average, so below, let's say, 56,000, then it is still okay, and that gap might get filled, and maybe that is kind of a worst case scenario at this point in time. So I would say we just have to be patient. Today it's October 2nd. It is also a solar eclipse, which tends to have kind of magnetic moves on these financial markets, crypto and stock markets, and tends to cause volatility too. So maybe it's possible that this eclipse here on the 2nd ends up marking some sort of bottom, some sort of low. Either way, I think within the first 1 to 2 weeks of October, we probably find a low and then continue higher. So that is what I'm looking for in these markets right now. Be sure if you trade with leverage that of course you manage your risk. You should always only be risking 1% of your trading account on any single trade. Meaning if you have $10,000, you should only be risking $100 per trade. If you are wrong, this ensures your longevity, and it means if you get stopped out, it's no big deal. You lose 1%. And obviously when you're right, you're aiming to make 2% or 3%, so that means you don't even need to be right 50% of the time. And of course, my favorite place to trade is Blofin exchange. I have a link down in the description below. If you use that to create an account, you can get up to $5,000 bonus just for signing up and trading there. But also in cooperation with Blofin, we're giving away an iPhone 16 valued at $1,500 and 3 prizes of $300 to random people who trade on Blofin exchange who have signed up through my referral link. So come and trade there. I think it's a good exchange. The interface is great. Everything works very, very well in my opinion. So down in the description below, sign up, create an account, deposit, trade there, and you get the chance to get a lot of bonuses as well as a lot of extras that in future I will release also to people who sign up through my link as a thank you. Let me know what you think is going to happen this week. Do you think we are over? Do you think we're going a lot lower than 56,000? Or do you think indeed in the same way that I explained it here, that this is currently just a flush or a correction in a bullish trend and that we will see new all-time highs this year? Let us know what you think in the comments down below.